Good morning. Yep, we made it, or almost there.
We are.
We'll see. We'll see. A fresh trading session is still ahead, though. You're watching the China Show. Good morning to all of you. I'm David Ingles with Rebecca Choong Wilkins.
Our top stories this morning. Gold reaches a fresh high as President Trump's trade war pushes investors to those safe havens. Chinese stocks, though, set for their best quarter versus U.S. peers in 18 years.
Now, with fresh U.S. tariffs just days away, Beijing reaching out to America's Asian and European allies to improve business ties. President Xi Jinping is also reportedly meeting with global business leaders in a show of private sector support.
Also ahead, Australian Prime Minister Anthony Albanese calls an election for May 3rd with the sluggish economy and the rising cost of living both in focus.
Plus, a Bloomberg scoop, Washington seeking control of major parts of the Ukrainian economy as the price for U.S. support edging out Kyiv's European allies. Welcome to the show and good morning to all of you right now. As we just wrap up this trading week, there's some semblance of perhaps better stability right now across prices. Not a lot more, though, uncertainty as we certainly go into a weekend, and certainly tariffs, of course, on the back of, on the other side of this weekend as well. On aggregate for the week on equity markets, we're either slightly flat to slightly higher, depending on which benchmark you're looking at. You are getting some weakness, though, coming through, particularly across some of the tech plays as well. So you have the Nikkei, you have the Kospi, and likely we will see, of course, this play out across Chinese equity markets in the opening minutes. Now, of course, what we've seen so far is this divergence between Chinese tech, in fact, in the opening minutes and then the hours after that. So we'll see what happens in terms of the price action trend. Nothing much as far as sort of the bond picture is concerned. Currently, we are moving, of course, into PCE later on today. You have the UMISH numbers coming through as well out of the U.S. And, of course, we go into then the non-farm payrolls print, which effectively will tell us really a lot about the sustained the turning of the corner on the slowdown in the United States. Gold, not here, but that's the big story, of course, across these markets today so far. Fresh highs there, as you can see on the gold price. Right, Golden Dragon Index up overnight, 1.4%. We're looking whether this move will translate into the move in about 18 minutes or so across, really, as you can see, the big tech plays as well. I mean, just to mention, as we flip the boards, we are, as we pointed out at the very top of the show, on track for the best quarter MSCI China against the S&P 500 in 18 years. You know, we've only had, and I think 6 or 7 weeks of net outflows out of Hong Kong through the Stock Connect, going back about a year, right? So we've seen consistent buying from the mainland. We are called slightly higher on some of the futures right now. Dollar China did catch some support at the 100-day moving average. So we have been very, very stable here on the Chinese currency. So we'll see what happens today, of course. Rebecca, one more day left.
One more day left, but actually, maybe not for those in Hong Kong. It is a big week, specifically in Hong Kong. We have, of course, the Hong Kong Sevens coming up, as well as Art Basel. So, you know, the weekend might already be here for some of us. But for those of us still trading and still looking at markets, of course, we have Xi Jinping reportedly meeting CEOs today in mainland China. So that's BMW, Mercedes, Qualcomm CEOs. So according to a report from Reuters, we also do still have a slate of earnings coming through. Big banks, big consumer names, some auto names also coming through there. And gold stocks, to your point, Dave, very much in focus today, given, of course, that rush to the safe haven that we have seen. And we continue to be in the window for MLF, the rate, of course, 2% there.
Yeah, okay. Yeah, we'll see what happens today. I mean, certainly, if you had to pick one or two markets globally where momentum was really, at least it's more pronounced than others, it's really in this Chinese market and over in Europe. I think on a cross-asset perspective, certainly it's gold really that's giving you a lot of momentum and a lot of uncertainty. Now, the question is really what happens with the U.S. dollar. And I think we have a guest, in fact, that's going to talk about it. Maybe that the dollar is likely to see continued weakness moving forward. Right. Now, to the point that you were making here earlier on, of course, China is engaging further the private sector, not just local.
Yeah, absolutely. Yeah. Foreign too. Of course, it's been a big week. We've had the Boao Forum, sometimes called China's Davos. And now one of China's top leaders calling for increased global cooperation and opposition to protectionist measures. Vice Premier Ding Xuexiang spoke at that annual Boao Forum I mentioned, as the US is looking to upend trade and geopolitical relations. Our chief North Asia correspondent, Stephen Engel, is there and joins us now. Steve, I mean, just give us also the big sense that we've had from Boao. what has been the overwhelming sentiment from officials, as well as, of course, from that latest speech?
Well, I think resilience is probably a good term that was bandied about quite a bit here in the halls of the Boao Forum for Asia, in the face, obviously, of the tariff threats, in the face of potentially more tariffs next week. And this is a little bit of a different kind of gathering than what we got over the weekend at the China Development Forum, where you have really, really high-level officials, including the Premier Li Choong, and you had Blackstone's Steve Schwartzman, you had Tim Cook from Apple, in pretty much an invite-only gathering at the Diaoyutai State Guest House, and also Trump's unofficial envoy Steve Daines was there. Here at Boao, you get much more closer access to officials who are coming here to kind of swap notes, really, about how to deal with the tariff threat, geopolitically and on the business front. Lei Jun of Xiaomi was seen wandering the halls. In fact, the former PBOC governor, Yi Gang, sat in the front row staring intently at me at my panel that I moderated yesterday. They are all trying to get insights on how to navigate this, including the Pakistani finance minister, whom we spoke to yesterday. They're issuing a panda bond, but they're also trying to figure out who can we rely on? Who can we do business with? How can we navigate these Trump global tariffs? This is what he had to say.
Of course, U.S. is our largest trading partner, is the largest export destination for us from Pakistan. But at the same time, we are also building our regional corridors. So in terms of our increased trade with GCC, with Turkey, and going forward with the Central Asian republics. So I do think while the global trade may not be a driver of growth in the short term, but these regional corridors are going to become very, very important.
I think there's a lot of reassessment going on in the face of these tariffs. In fact, out of Tokyo, not here, but Prime Minister Ishiba even saying he won't rule out countermeasures from Japan, given how many face-to-face meetings the Japanese had with the Trump administration to try and get concessions on the auto tariff front to no avail. So he's even saying there could be countermeasures coming from one of America's closest allies, Japan.
Steve, this, again, and I think quite fittingly, the juxtaposition really of the tensions there and really the visuals and the sound from behind it. The blue skies are out, we hear the birds, and maybe this olive branch. What do we know about this meeting between Chinese President Xi Jinping and global CEOs taking place?
We're trying to get more information about that. We've heard about it for about a week now when we were at the China Development Forum and now through Boao. We've been hearing, we circled the calendar, March 28th today, that Xi Jinping had called for a meeting with selected multinational executives, perhaps at the Great Hall of the People. We do have a reporter at GHOP, as we call it colloquially, in Beijing for that potential eventuality. We're hearing from other media that the heads of Qualcomm, Mercedes, and BMW are among those on the invite list. We simply don't know. But we do know that there is a very clear charm offensive going on from the highest level of Chinese government, including here as well. So it probably began a month ago when Xi Jinping offered that giant olive branch to Jack Ma and other tech leaders after pummeling down the platform economy for several years. All of a sudden, this government here, faced with those external shocks and a slowing Chinese economy and that property mess that has no end in sight, we have him appealing to the private sector. And that's where he is also appealing to the private sector from multinational companies to come and bring investment back to China. In fact, this is what Ding Xuexiang, the number 6 member of the Standing Committee in China, said yesterday. No matter how the external environment changes, China will open wider to the world. So that's music to many ears of executives who want to do business in China but pulled out investment to the tune, I don't know the exact number, but I do know that foreign direct investment into China last year fell by the most since 1990. So more than 3 decades. That's the year I moved to China 35 years ago. So that's quite significant.
Now, Steve, okay, let me stop you there. Stephen Engel, our Chief North Asia correspondent, and fantastic reporting at the Boao Forum this week, of course. There. And speaking of this charm offensive, right, it's this might sound strange, right? But in case you missed it, this tour of an extremely popular 20-year-old YouTuber, of course, across China, I Show Speed, of course, I guess in many ways underscores the sort of soft power push there across there. We're down 1% now on the benchmark going into the open, 20 minutes away. As you can see, Japan's now off 2%. Taiwan is off about 1%. Let's get a sense of markets, particularly FX and rates, as we go into the PCE report later today out of the U.S. And, of course, next week is it's the jobs report. Joining us now is Carol Lai, portfolio manager and senior research analyst at Brandywine Global. Carol, good morning, and thanks for spending a few minutes with us. The notion that the dollar softens from here, is that something that you buy into or push against?
Right. I mean, maybe let's rewind back a little bit about how we exactly got to this, even to this, soft kind of a weaker dollar situation, right? I think it was really after post-Trump election, everyone was really in favor of the U.S. But of course, the tables turned very quickly, with recent events kind of signaling that kind of potential growth divergence that's underway. A lot of it, obviously, is because, Trump's administration has been very aggressive on tariff policies, immigration crackdown. It's been affecting slower consumer business spending, potentially even a drop in tourism. And then on the other hand, you have had positive news that has been coming out of Europe and of China, as the previous speaker was alluding to. So what we are saying is that in Europe especially, we are starting to see that kind of divergence that's really being driven by fiscal spending amongst these countries. And fiscal spending is one of the bigger themes that we are going to see for the rest of this year, and perhaps out into the next 1-2 years as various countries try to tackle or offset the kind of tariffs that's being put on them. And so we do feel that we should be able to see more signs of European growth getting stronger. Bond yields there going higher. And that also helps the FX, the euro overall. In China itself, we have seen a lot of that bottoming out that has been happening. Basically, China, their latest fiscal budget release was one of the largest outside, the COVID period. So, and they are reprioritizing the private sector, boosting consumer, confidence overall with all the meetings with leaders, with CEOs and things like that. So that really helps. Right. So I think over the medium term, against the backdrop of, that kind of overvalued US dollar, the kind of divergence in growth expectations and more fiscal spending from the rest of the world, that will kind of drive the euro and the rest of the world currencies actually higher versus the US dollar. Now, having said that, of course, in the immediate term, the dollar has weakened by close to 5% in just a quarter. So there could be some temporary, give backs on tariffs if it ends up weakening global growth more than expected next week when second April comes around. But our medium-term view has not changed, and we still see a weaker dollar going forward.
Carol, that's very comprehensive. One thing you didn't mention there is, of course, emerging markets. And last year, we did see that emerging market carry help recoup some of the losses, particularly the losses we saw from the yen last year. So I'm just wondering, where do you see EM fitting into all of this through the rest of 2025?
Yes, I think the EM, well, if you look back in past cycles, the EM really thrives on two things, right? The first thing is where you don't get a global growth, a huge global growth slowdown. EMs do best, even if in a soft landing scenario. And the most important thing for the EMs as well is for China. As long as China is holding up, they should be fine, right? And obviously the US dollar weakening as a broad measure, that really helps as well. So what we suspect going forward is that EMs should be able to hold water here. It should be able to hold itself here. We do like a couple of the emerging markets out there that does pay a certain amount of carry that makes us quite comfortable to be still in there. Most of the time, it'll be both in bonds and currencies. And I think a couple of the Latin American currencies and bonds do stand out in that respect.
Oh, okay. Yeah, I was actually going to ask for more specifics on that, but thank you so much for clarifying the LatAm play there. So let's assume then And obviously we don't know what's going to happen with tariffs, right? Whether or not this is going to be the conversation we're having in 10 months' time. But let's assume the U.S. growth slows. Let's assume we are in some sort of stagflation environment in the U.S. Yeah. What strategies do you think will work best? Where will we get the best returns in that kind of environment? Let's call it the next 6 months.
Right. Now, in that kind of environment, it is going to be, rather tricky, obviously. I mean, broadly overall, if it's really driven out from the U.S., it'll be tough in some extent because of, if you're talking about, hedging out on U.S. bonds, it might be a bit tough because it's stagflation, right? So there's inflation, being embedded in bond prices. Now, I think the one place that can really help then is, looking at the yen, because the yen tends to do well. It's a bit like gold, right? It does well in the kind of stagflationary environment, and the yen is still very cheap. And if you look at today's results of the CPI, the Tokyo CPI results, it is still signaling that core inflation is still relatively high enough, and that the BOJ should be, pushing rates up higher, eventually over the next 1 year up to the next 2 years, right? Of course, in the immediate term, again, there could be some weakness in the Japanese economy because of all the auto tariffs and things like that. But when you look at the structure of the economy, it still tells you that they are good for having a higher interest rate path going forward. So, holding, I think the yen is going to be one of the quite helpful currencies to be owning in a stagflationary environment.
Carol, just as you were finishing up there, I see the reference rate has come in at 7.1752. I mean, that's essentially what we saw yesterday, so in keeping with generally what we've seen through this week. Any case, Carol Lai, thank you so much for joining us. That's Portfolio Manager and Senior Research Analyst at Brandywine Global. And, of course, we are counting down to the open of trade in Shanghai, Shenzhen and Hong Kong. You're watching the China Show, and we're just bumping out on that shot of the new Kai-Tak Stadium where many of us, some of us, might be at the Rugby Sevens later today.
Welcome back. You're watching the China Show. Let's just pivot for a moment, talk about Australian politics, where you have the Prime Minister there calling for an election in just over a month from now. Certainly kicking off this campaign, expected to be the focus of this cost of living pressure and housing crisis, plus the sluggish economy. Let's have a look at that.
Our government has chosen to face global challenges the Australian way. Now, on the 3rd of May, you choose the way forward. Your vote has never been more important, and your choice has never been more clear. This election is a choice between Labor's plan to keep building or Peter Dutton's promise.
Let's bring in Ben Westcott, our Aussie-Australia government reporter in Canberra for us. Ben, what date are we talking so I can take that day off?
It's going to be May 3rd, so circle that one in your date planner. Basically, that's a 5-week campaign, which might seem like an incredibly short period of time to our American viewers. But the campaign's already basically been in swing since the start of this year, so it's going to be about 5 months in the end. The government had originally planned to hold the election on April 12, but had to delay that because of a cyclone in Queensland, so now we have May 3. And this is an election that, compared to the last one, which had these very high level issues of political integrity and climate action, will be really fought around hip pocket issues after the global inflation crisis hit Australia head on.
Ben, it's been difficult in recent history for current leader to win consecutive elections in Australia. Just tell us, who are the two candidates we're eyeing, and particularly, what do both of them mean for Australia's relationship with China?
Absolutely. So Australia's had 7 prime ministers in just over 20 years, a result of our political instability and inter-party rivalries. Basically, the two leaders are Prime Minister Anthony Albanese, who is a lifelong politician and a real member of the left wing of the Labor Party, a political scrapper, And he's been a reasonably unpopular prime minister, but his big priorities are the things you'd sort of expect from a centre-left leader. And his government has worked very hard to repair relations with China, bringing stabilisation there and the removal of tariffs on a wide variety of Australian produce that were imposed during the COVID-19 pandemic. Now, on the other side, we have Peter Dutton, who is the former defence minister. During his time in office, was a very prominent China hawk, often comparing China to Nazi Germany. And although he has worked very hard to sort of repair his reputation with the Chinese Australian community and sound more dovish, there's no doubt that certainly were he to take power, he would be a lot tougher on China, a lot more it would embrace the Trump administration's rhetoric toward China in a much bigger way, and that would certainly sour relations between Australia and China again. So for the relationship, this is a real sliding doors moment between the two countries.
OK, Ben, I'm sure we'll have you on plenty more times before as we count down to that 5-week deadline. That's Australian government reporter Ben Westcott there for us. And elsewhere, here are some of the big global stories that we are following today. Bloomberg has learned that the US is pushing to control all major future infrastructure and mineral investments in Ukraine. The agreement would grant the US first claim on profits transferred into a special reconstruction investment fund that would be controlled by Washington. It would also require Kiev to pay for all US military and economic support provided since the start of the war. The deal could undermine Ukraine's bid for EU membership and give the US effective control over large areas of Ukraine's economy. Prime Minister Mark Carney says Canada will fight back against President Trump's trade war, but declined to outline specific actions. Carney says his government will respond based on what the US does next Wednesday, when Trump plans to announce so-called reciprocal tariffs. Canada has already imposed retaliatory levies on over $40 billion worth of US products.
Right, just over 6 minutes away from the opening bell, and we are set for gains here in Hong Kong to a lesser extent on the mainland. But as you can see, there is some momentum coming through despite the broader weakness that we're seeing across risk assets today. Plenty more ahead. This is the China Show. Welcome back to the Friday session. Just a couple of minutes away. As you can see, we're looking at gains going into the open. A couple of very few standouts so far. NEO to the downside. We'll talk about that in a moment. Leaning came out with some decent earnings, a sales beat there, so that's actually seeing some upside. And of course, within this space, it's really about gold and gold plays. I guess one of the best proxies there would be Zijin Mining coming up on your screens. There we go so far. So yeah, we'll hit the open. Coming up next. Happy Friday. This is the China Show.
Welcome back. You're watching The China Show. It's a very grey and misty day in Hong Kong, and I'm also sort of giving up slightly on what we're going to precisely see with the Hang Seng. I feel like we've got this wrong every single day this week. We've seen a kind of slightly positive or slightly negative momentum start the day, and then within the first 30, 40 minutes of trading, quite a rapid change in the direction of travel. So anyway, here we go. Look, we look sort of 0.4% higher on the Hang Seng. Let's see whether or not we can sustain that positive momentum through the last session of the week, Dave.
Yeah, to hold off on those headlines for now. As things stand, it's flat to slightly higher on these markets. And as Rebecca was pointing out as well, we're wrapping up this very big week in Hong Kong. And as you can see, the weather's not exactly cooperating, but I can guarantee you what you see in Hong Kong right now is effectively the equivalent of Rebecca and I's vision right now, just after the bit of a roller coaster.
Clinging on for dear life on a Friday.
We're going to get there. So my plan is, there's nothing happening in the markets. I'm just going to tell everyone what my plan. My plan is to go into a dark, cold room for 3 days.
Yeah.
Very soft, moderate level of Gregorian chant in the background, just to unwind.
Cold flannel across the face.
Everything, yeah, just weight on my body.
Yeah.
It's been that kind of week, So after shows are done, I am immediately headed home. Flip the boards, please, and have a look at Hong Kong. And while you look at Hong Kong, let me tell you what else is probably going to happen. The A lot of the, perhaps the most outright extroverts out there are probably also going to need some Benadryl, just to calm them down a little bit. There's a bit too much interaction that's taken place this week. But in any case, it's been a very fantastic week, right, of events in Hong Kong, and we're wrapping things up. In fact, that's just my way of saying stay tuned for Min Min Lo. She's coming up on the show to just give us a scene setter right now. I think the first match might actually be starting for the Hong Kong Sevens. Anyway, we'll talk more about that. Gold, why not? No quick pivot there. We'll talk about Tencent in a moment, too. So gold is,
Talking about safe havens to recover in, Dave.
Yeah, I mean, if you had placed your money in gold, nothing comes close to gold this quarter, I think, from a broad asset perspective, right? Up 16% year to date. Momentum is certainly on the back of that. It's basically gained every week this year so far, with the exception of one, which I think was in late Feb. The earnings story in Hong Kong, you've seen it out yesterday. Jiangxi Copper, speaking of metals, not quite the glittering type. Copper, of course, there. Up 1.8%. Yeah, China Life also coming out as well, and that one is actually also an HSBC cutting that one to hold. A New World on the back of that story. It's looking for a $2 billion loan, sources are telling us, and of course the collateral there is it's one of its most priced assets, Victoria Dockside. Okay, why don't we talk about Tencent and the big moves there as it pertains to Ubisoft there?
Yeah, this is an interesting development. So 10% investing more than $1 billion in a new carve-out of French video game maker Ubisoft. The new entity will include popular titles such as Assassin's Creed, Far Cry and Rainbow Six, and will be worth more than $4 billion. Let's go to Bloomberg Intelligence equity research analyst Nathan Naidoo here. I mean, first of all, what's in it for Ubisoft? Why is this deal so significant?
So I will boil that down to two factors. Cash flow in particular. Ubisoft has more than 2 billion euros of debt outstanding, and most of that are going to come due over the next 3 years. So there's potentially cash flow issues while at a time when games are not being executed well. And second point, segue into execution, is there were a few poor launches of its game which led to results plummeting, issues with valuation. So Tencent brings wealth of execution and solid track record in launching games, not just in China, but also globally. So there's much to be gained from Ubisoft in this deal.
What about for Tencent? What's in it for them?
So Tencent is obviously a global gaming behemoth, not just on mobile, not just in China. And Tencent, get access to easily Assassin's Creed, a franchise that's easily one of the top 10 highest selling franchise ever of all time across all platforms. And Assassin's Creed is primarily a PC and console game, so there's a lot of opportunity in building a mobile version of the game, particularly for the Chinese market and also elsewhere.
So the deal is 3 times bigger than Ubisoft's market cap, around 4 billion euros. Just talk us through the logic and the thinking of this.
Yes, with what has happened to Ubisoft valuations and share prices recently, it's hard to forget that once upon a time in 2018, Ubisoft was a 10 billion euro company, and then 8 billion in 2018 and 4 billion in 2022. So there was a lot of key risks that led to that, and one of them was bad execution in launching games. So I think, this makes sense because the franchises itself are actually very valuable. We talk about Assassin's Creed, Tom Clancy's Rainbow Six, and some of these franchises are a lot more valuable, and I think it makes sense that Tencent are now helping to execute this franchise.
Yeah, tell us more about that. Have you played Assassin's Creed? And what would be the prospects if you take it away from the PC?
If we're not going to Sevens and we're not going out this weekend, should we be playing this?
I haven't played the game, but it freaks me out obviously with the killing and the samurais. But it's definitely a very good game. Assassin's Creed Shadow just launched to a massive success with 2 million players and counting. So so this franchise continue to prove that it has a loyal and almost cult following, despite similar games that are also in the market, like from Sony, Ghost of Yotei. Okay,
yeah. If you're freaked out by the violence and everything else, let me suggest something. Resident Evil.
Oh, wow.
Yeah, that's something of a different page.
That's the catharsis we all need.
Yes.
Yeah, okay.
Exactly.
Okay.
Exactly. Oh, that's a good idea going into this weekend. Yeah, just to cleanse our souls of the everything and anything here this week so far. Fantastic. Nathan, I'm sorry. Nathan Naidu there, of course, our Bloomberg Intelligence Equity Research Analyst. Rebecca, you're putting things in my head going into this weekend. But yeah, that's a good idea.
We all need it sometimes.
Yeah. Okay. Well, I mean, are we working too much in Hong Kong? I think is
Dave's got the answer for you there.
It's the segue there. Yeah. So we're known as a financial center. You have the biggest financial institutions in the city. We rank very, very high. There's massive wealth push. But also, when you look at some of the rankings, right, we don't exactly rank very high in terms of the sort of work-life balance, happiness index. So I put all those questions, in fact, to our financial secretary, Paul Chan, and this is what he had to say about all those things.
Our ambition is to extend this kind of connect arrangements beyond Greater Bay Area. Say, for example, in China, Shanghai also very prosperous, high income. People also want to have certain asset allocation offshore. So why not? At the moment, in this stock market, the connect scheme is between Hong Kong, Shenzhen, and Hong Kong, Shanghai. Yeah.
I mean, we're here to talk about family offices and obviously the priorities of the government in terms of the progress report, where we are, and what you guys want to achieve. Well, give us the state of affairs. How are things? Give us an update of what you've seen so far, and are you happy with what you've seen so far?
Well, the economy is growing steadily. Property market stabilizing, stock market doing very well. Unemployment rate is low. Inflation rate also very low. So overall speaking, I think we are marching forward steadily. And at the same time, the mainland economy is also stable, growing steadily, which is also a positive factor for us. We expect the stock market will continue to be very vibrant. In terms of IPOs, there are over 100 major companies on the pipeline waiting to be listed. We are also working very hard to promote cross-boundary capital flow. In addition to the connect arrangements with the mainland, the possibility of enhancing two-way capital flows between Hong Kong and the emerging markets like the Middle East.
I forget where I read this over the weekend, that Hong Kong doesn't rank very high in terms of happiness. And I'm wondering, and I'm cognizant I'm asking this for a room full of financial professionals and the financial secretary. I mean, do we work too hard in Hong Kong? Like, how do we sell the lifestyle if it seems as if we're just chasing our tails?
Yeah, we do work very hard. And also, we went through some challenging years, as you may know. Particularly this week, wonderful week. We have an array of arts, sports, culture, F&B. So work hard and play hard.
There we go. Yeah, that was Paul Chan at the Bloomberg Family Office Summit, which is among the many, many events, of course, here in Hong Kong this week. Just to, I guess, one point that the financial secretary was making there on the markets itself, right? So over 100 IPOs are slated to come to the market this year. Obviously, there's a big cohort of that is part mainland companies coming to Hong Kong. Plus, of course, this is pushed to broaden out the profile of listings here, including Middle East. Hint, hint, we don't know, but yeah, Southeast Asia, all are welcome, he says, to list. And of course, to the vibrancy of the market, as you can see, over the last year or so, we've only seen 6 weeks of outflows through the Stock Connect. Mainland investors have been pouring money here into the city fairly consistently here.
Yeah, that's right. And just picking up on Paul Chan's message there, play hard, work hard. If you want to learn more about that, you can get our insider's guide to the money and people shaking up the finance hub in our Hong Kong edition. There's a great issue out that was out on Thursday, including reopening of one of Hong Kong's favourite cha chan tengs on Wellington Street. It was a marker, a favourite among sort of late-night eats. And it comes nicely alongside the return of Hong Kong Sevens and some of our nightlife in Hong Kong. So anyway, sign up, take a look at bloomberg.com/newsletters. We're also now, yes, here they are, taking a look at some of those pictures, talking of the Sevens from Hong Kong's new Kai-Tak Stadium. So we have the Hong Kong Sevens there kicking off for the first time. I mean, it's an iconic Hong Kong activity, right? Sevens has been iconic for so long in Hong Kong. And we will have, Are you going to go?
You know the answer to that question.
We might all be having very geriatric early nights here. But nonetheless, we will have live coverage from that event coming up. You're watching The China Show. This is Bloomberg. Happy Friday.
Welcome back. Just an update here of shares of NEO. As you can see, we're down substantially here. This is really down to that share placement, just over $500 million, and that's what it will tend to do with the stock. I think we are now at about session lows here on the Chinese EV maker. We'll revisit this later on, but that's effectively what's taking place there. Right. More conversations from this week.
Yeah, taking a bit of a step back here. UBS Asia Pacific President Iqbal Khan seeing stagflation as the biggest risk for investors. He spoke with us exclusively at the Bloomberg Family Office Summit in Hong Kong about why he's not expecting a recession in the US, despite all of the rising trade risks that we're seeing right now. Let's just take a listen.
The biggest risk for everybody is to sort of like have this perspective of hope, right? I think everybody needs to focus on the fundamentals. Even if you look at the U.S. economy, you mentioned there is a slowdown in growth. In a number of the fundamentals, you're not seeing that to the extent that you might read in the media. If you look at some of the portfolio companies,
it was the OECD that cut its growth projection. It wasn't the media.
Global growth projection. I'm not arguing with you around is global growth higher or lower. Also, the reduction was not that significant. The biggest question, if you think about risk, I don't think it's a risk question of how much growth we will have or not. It's stagflation. That's the real risk out there. And that's what everybody wants to avoid. And I think most of the central banks, including the Fed, is clearly very, very focused on that.
Do you see a recession in the U.S., given multiple tariffs that we're looking at, given the expectations of a trade war? Prior to the 25% tariffs on autos, there was a chance of, I think, 35 to 40% of a recession in the U.S. Summer says 50. How are you looking at the possibility of that happening?
Look, I think we're not seeing that as of right now. Have risks gone up in terms of having a slower economy? Yes. Equally, if we look at this whole, everybody keeps on coming back to the tariffs, right? I mean, most of these tariffs have actually been short-lived, with the exception of specific tariffs and the reciprocal tariff that's been announced. And let's see how long some of these more significant tariffs are going to actually prevail and exist. If you look at what happened earlier on this year around specific high-level tariffs, you saw them being taken away post-negotiations and conversations. At the end of the day, the question will be how do tariffs really impact the economy, and what level of tariffs impact the economy? If the objective globally, and I'm not specifying onto the U.S. administration, but globally is to actually have a world where you are at the same level playing field and the product makes the difference. If that is, and assuming that is the objective, but if that is really the objective, then this will be a transition period. And this transition period brings uncertainty. That uncertainty has an impact on volatility in markets.
There you go. And that was the UBS Asia Pacific President Iqbal Khan speaking with our colleague, of course, and our Insight anchor, Haslinda Ahmed. Just some other corporate stories we're tracking at this point. Now, Bloomberg has learned that Hong Kong developer, we're talking about New World here, is seeking an additional loan of $2 billion, and the company has proposed using one of its most valuable assets, Victoria Dockside, as collateral for a 3-year loan. Now, New World is still in discussions on 2 other potential loans in a bid to refinance borrowings set to mature this year and also beyond. Now, China's largest offshore oil and gas driller has posted higher annual earnings and boosted its dividend as growth in its energy output offset weaker prices. CNOOC, as you can see, shares down about 2% on your screens. We're looking at a $19 billion. Now, output, of course, expanded to 727 million barrels of oil equivalents. The company says it will stick to its 3-year output targets through 2027. Now, Jiangxi Copper also coming up on your screens. The company reporting full-year earnings that narrowly missed the target from the street here. The Chinese metal giant says results were boosted by strong prices of copper. That was last year, and were affected, of course, by its loss-making refining business. Now, it expects copper prices to remain strong despite the light supply, but also warns the market volatility next year, driven, of course, by U.S. trade policies. All right, we're just getting warmed up here on the China Show. Plenty more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. Now, Hong Kong's shiny, brand new $4 billion stadium will be put to its first big sporting test this weekend. Rugby fans from across the world are expected to fill up the 50,000-seat venue as the beloved Sevens tournament returns to the city of Hong Kong. Our China correspondent Min Min Lo is at the new Kai Tak Stadium. Min Min, tell us, what is the mood there, and can we still buy tickets?
I think as of yesterday, it was 90% sold out. So organizers expecting record turnout of 139,000 visitors. I'm not sure. I think you can check the website if you can still buy tickets. But as you said, the first big test for this major venue and whether it's ready to host such a big event. The Hong Kong Sevens is the crown jewel of that World Rugby Sevens circuit. And it's part of the government's investment. $4 billion spent in building out this sports park in order to make Hong Kong this international hub for mega events. After Hong Kong lost out to arch rival Singapore when it comes to attracting international superstars, the likes of Lady Gaga and Taylor Swift, and of course also a bit to bring in more tourists into the city after we saw a drop in visitors post-COVID. Have a listen.
All of the technological advancements. It's a stadium that's state-of-the-art and made specifically for Sevens. We're in a really great place where if we supplement the increase in overseas visitors, but also build on the local visitors that we had, local fans that we had during that time, we're going to be a really healthy place.
So whether or not this stadium will be able to replicate a sort of electric atmosphere that we saw in previous years in the Hong Kong stadium is the question this year.
Yeah, okay, tell us about the venue, Min Min. I mean, most of us who live in Hong Kong have somewhat caught a glance of it from the outside, but how does it feel to be inside? Talk to us about the tech, the acoustics and everything there.
The acoustics is pretty good. There is a retractable roof here. It's closed now. It's actually pretty cool here. The air vent system is working, and that is what makes this event a multi-purpose hall for different types of events, because the next big event is going to be the Coldplay concert. And so that turf that you see behind me is going to be rolled up, packed into refrigerated trucks and shipped across the border to a dedicated farm in Zhuhai where the grass is being nurtured. So very expensive to do it in Hong Kong with the land cost and labor cost. That's why they're doing it overseas. And then, well, not overseas, in China. And then we also have, of course, the South Stand. That is the iconic heart of the party where people would outcompete each other with their costumes. In the wild years, many years ago, sometimes you see the occasional streakers that would appear, but of course that's already clamped down by the authorities. But the designers tried to replicate that in a spirit to preserve that spirit, down to the number of seats and the concrete entrance ways as well. And as John Lee, the chief executive, said at the opening ceremony for the stadium, he said, like the roof, the sky is the limit for Kai Tak Stadium.
Oh, wow. Okay, I like that. And I think Min Min might be standing by there for the South Side. She'll be coming as a journalist. There we go. Min Min Lo, our China correspondent there at the Kai Tak Stadium. I can actually confirm, I'm looking at the website now, there are still tickets available right now. I just tried to purchase, didn't go through all, obviously. So, I mean, check it out on the internets. Okay, very briefly amidst this, I'm just looking at the market boards right now. So, I guess we can talk about the macro in a moment because we're seeing some, fairly hefty losses on the benchmarks themselves. Now, this is an idiosyncratic story, of course, in NEO because it's a share placement, and we are, in fact, we're pushing lows of the day, 2.7 and a fifth of 1% to the downside, just about $30 right now, Hong Kong dollars a pop here on shares of NEO. We are in the thick of earnings season. We'll talk about banks in a moment. In fact, JPMorgan will be joining us in the next hour of the show to help us just what we've learned so far from those that have reported and how we can sort of how it informs us of the trends that have formed, particularly on margins, NIM guidance, the fee business. You know, dividends, of course, is still a very, very big key of focus here. So what are the best dividend plays as far as this banking space is concerned? Now, higher was out with some earnings. No pun intended. Higher is lower today, as you can see. China Everbright was also coming out with earnings to 8.7%, 9%, call it 9% to the downside here. So third straight year that the company's in the red. So we'll keep an eye on that. China East Education leaning also out with some earnings there as well. Right, very, very briefly, let's have a look at the benchmark right now and how we're doing, you know, across the sort of overall picture. So we're down again on the mainland markets. I think we're down for the week as far as that's concerned. Down, if not slightly sideways. We've also seen turnover actually start to moderate in March compared to the peaks that we've had in August. Still over $1 trillion a day in mainland market turnover, but it's moderated towards that 1 trillion mark from north of 1.5, in fact, closer to 2 at some point here. 0.4% on the Hang Seng Index. It's quiet on the data doc in the Asia Pacific, I guess, apart from Tokyo CPI, which came in about hours back. Higher than estimates. We're looking ahead to the U.S. and the PCE numbers, of course, coming out later today. I think it's a 2.5% estimate we're waiting for there. More in the macro and the micro. The second hour of the China show is just ahead. Welcome back. You're watching the China Show. Geopolitics very much on our mind today, and we're looking at live pictures out of Manila. And of course, this is the first trip to the Asia Pacific by the Pentagon chief, of course, Pete Hegseth. He is talking, as you can see there, quite literally right now with the Philippine President Marcos. After the Philippines, he then moves on to Japan. But certainly high-stakes trip here, given just everything that's happening domestically as well, with, of course, what's been happening there with the signal chat.
Yeah,
issue.
well, yeah, two parts of this story. The first, I suppose, is what we've seen China doing. You know, on the one hand, issuing this charm offensive with its allies in this part of the world, in the Asia-Pacific. On the other hand, now also apparently sort of squeezing them in certain ways as well, adding pressure. But the other side, the story that you alluded to, is, of course, the domestic story for Pete Hegseth. He has been embroiled ever since the sort of quite explosive Atlantic story about a journalist that was added by mistake to a group signal chat that involved other U.S. officials. The latest in that, by the way, is that U.S. agencies have been ordered by a judge now to preserve those signal chats, all concerning for that sort of those few days around that period. So it's somewhat overshadowed part of the trip, really. I mean, it has been a story that people have been talking about through this week, not just in the U.S., but of course also in this part of the world.
It has taken over. The news flow has taken to some extent, and I think part of the trip, to the point Rebecca was making here, the high-stakes trip, is really to take a step back and hopefully be able to pivot the attention back to, I think in this case, the U.S. leaning on its allies here in the region, like the Philippines. And I think I caught sight of right across Pete Hegseth. He's talking to the president, as you can see. Right across him is Gibo Teodoro, of course, who is his counterpart over in Manila. So after this, he then moves on to Japan. The Philippines, of course, a bit of a background here, has also given additional military access to the Americans.
That's right. I mean, the countervailing narrative has been one around tariffs and, you know, the U.S.'s commitment to its allies, given that it's imposing tariffs on some of its sort of close friends. And I will note there's been some sort of social media in China about it, really asking questions. Why is the U.S. bullying some of its sort of so-called little brothers? You know, these middle countries that have been long been U.S. allies are now facing the potential economic squeeze with tariffs. So it's quite a sort of high stakes, and it's a difficult balancing act for Hegseth here. On the one hand, trying to provide reassurances about the U.S. commitment to the region, but on the other hand, also, of course, defending a very, very sweeping tariff agenda under Trump.
Yeah, and, you know, to add to that, too, that's a very good point. I'm glad you brought it up, because how are they able to deliver a consistency of messaging as it pertains to commitment when they're telling the Europeans, for example, that you will perhaps need to shoulder a little bit more of your defense as well? Then,
you know, underscoring this is when we have Ding Shuixiang, sorry.
Yes.
It's been a long week. Ding Shuixiang at the Boao Forum talking about China's push as the multilateral alternative in the world, as sort of the figure that wants us to continue having open borders and open trade. There's a very obvious alternative that Beijing is putting up here as a backdrop to Hegseth while he travels through the region.
As investors try and figure this out, you know what's happened as well? Equities have been on the offer. The camera shot is also a bit wobbly right now, as has been risk appetite. That's actually our cue here to take a step out. I'm going to take a step back into the shot as well as I try to figure that out.
We're a little bit wobbly today.
Gold has been stable, though, and that's really been the market iteration of this political uncertainty out there, as we also try and figure out to what extent the U.S. economy is slowing down, right? So gold has been hitting record after record after record. In fact, it hit a fresh level just a few hours ago. You're looking at spot gold. It's up every single week this year, with the exception of 1 week. Goldman has now upgraded its forecast for Blink to 3,300. Gold mining stocks across the region, I think you're looking at a sample size and a few proxies over on the Chinese mainland. Chinese mainland listed here in Hong Kong, to be more specific. But apart from this, and apart from Chinese markets, it's not looking good out there, really. You look at risk appetite, Nikkei's off by 2. Kospi is closing in on 2%. Taiwan is down about 1%. Really, the bright spots are Hong Kong and, of course, Australia, given, of course, it's the materials plays that are helping keep that looking respectable. Tokyo inflation came out. I think we can get to that later on. Apart from the yield story, there's PCE, of course, which is very much on deck. And to the point we were making earlier on U.S. Exceptionalism peeling away and fading away, two things are coming up. UMISH numbers, inflation expectations, consumer sentiment, and then you have PCE coming through as well. With all that in mind, let's bring in Lianting Tu, our Bloomberg Asia Equities Managing Editor, to just get us up to speed on the coverage for the day. Yeah, Lianting, what are you guys talking about today?
Yeah, I think today overall market actions are muted. I think a lot of people are talking about what's going to happen on April 2nd and what's going to really impact, how is that going to impact the Chinese market. So we have been talking to a lot of people to gather views on what they're doing to prepare for that day. And a lot of people are actually telling us that China's onshore market seems to be the place to be. And that is a view not just from the Chinese local funds, but also from global international funds as well. The view is that China's onshore market hasn't really rallied much or at all this year so far versus the offshore market. And there is a huge amount of technological advancements going on onshore. So that's sort of the potential re-rating that could happen in the near future. And plus, China's exports into the U.S. has really come down, and China's share in U.S. goods imports actually have come down by about 8 percentage points in the last 8 years or so. So I think all that seems to point to the contrarian view that China may actually be the place to be during the tariff chaos next week.
Yeah, that's a good point. I mean, there is this sort of feeling of wait and see. We're sort of counting down to April 2nd. We are getting some hard data in the form of earnings, though. I'm wondering how you're seeing investors reacting to earnings. Part of the difficulty, of course, is that some of these big names, particularly I'm thinking of the tech names, have been sort of priced to perfection going into earnings. But yeah, what is sort of investor sentiment about what we're seeing so far?
Yeah, you were exactly on the money, Rebecca. It is true that with the big offshore rally, people have priced in a lot of good news. So the earnings season was used as a profit-taking opportunity, unless there is a huge amount of upside surprise. And to be honest, there hasn't been. Earnings have overall been good, especially for tech names. And Morgan Stanley actually thought positively about Chinese earnings for the first time in a few quarters. But again, given that it's the world's best performing market this year, it is really hard to see another leg up. And there is also, of course, more earnings to come to wrap up the earnings season. So next week, we are going to look at Maotai, China's biggest consumer stock, and also some real estate names, including Vanke and China Resources land. I think that would really complement the sort of the tech rally, by shifting people's attention to something that is still very much struggling, which is the property market. And also there has been little sign for consumption pickup as well. So I think there is still a little bit of sort of, detail that people are expecting from earnings that's coming up. And on the other side, for those that have reported good earnings and also saw shares rallied big time, they've come out with share placements. And that is, of course, good for the company to capitalize on the share gains. But it's been a force that's weighing on investors' mind in the offshore market. We've seen the likes of BYD, Xiaomi, and of course NIO last night in upsized share placement as well. So one big worry would be who else is going to come up next.
Yeah, that's a good point. Some of those share placement issues, as well as, of course, some of the laggards in the property sector, still waiting to see what comes in from there. Thank you so much for joining us. That's Bloomberg Asia Equities Managing Editor Lien Ting Tu in Singapore for us. And just some breaking news line crossing the desk now from Taiwanese authorities. Taiwan probing SMIC for poaching Taiwanese high-tech talent. So that is according to the Taiwan Ministry of Justice Investigation Bureau. We'll have more details on that story coming up.
Yep, coming up as well here. So we've talked a little bit about geopolitics and the updates coming out of Manila. We'll dig deeper into that specific story and also the other big one from overnight. All the news as far as Ukraine is concerned, the U.S. does want first dibs on Ukraine's future investments in infrastructure and also natural resources. The details on that specific scoop and the latest in the broader story just ahead. You're watching The China Show. Good morning.
Right, welcome back. You're watching The China Show. Global's geopolitical story now. The U.S. pushing to control all major future infrastructure and mineral investments in Ukraine. According to a draft partnership deal seen by Bloomberg, the Trump administration is demanding first claim on investments in infrastructure, energy and critical minerals. Bloomberg's Jill Desis joins us from Hong Kong. Details of the deal here and the things that have caught your eye.
I mean, look, I think that the big thing to really consider here is that idea of the U.S. getting first claim on any profits out of investments made into, any of these really critical energy infrastructure fields here. What it kind of, suggests is that, the Trump administration throughout the last several months has really kind of, put in this idea that, Ukraine, they kind of want to push back on Ukraine for the, amount of money that the U.S. has really invested in the war over the last 3 years. This seems to be some kind of a way for the U.S. to kind of recoup a lot of that investment that they've really put into this war by taking these profits. Of course, what this would ultimately give the U.S. is a pretty remarkable amount of control over, investments into really critical infrastructure here. Whether this is actually something that can move forward. I mean, it kind of, at the same time, obviously, Ukraine has been working for the last several years to obtain full membership in the EU. Does this undermine those efforts if you're giving the U.S. this kind of, really, substantial amount of control over these sort of critical areas here? I think that that's kind of an open question here. So whether this can actually continue, I think, really remains to be seen if this actually goes forward.
Yeah, I think part of the broader conversation is Russia and, some of the asks from the Russian side, to revisit sanctions and the Europeans chiming in on that specific demand too.
Yeah, I mean, really, David, I think what we're seeing here is that there's still a lot of massive amounts of tensions here at the heart of any kind of a deal that would ultimately see lasting peace, sort of an end to this war. Obviously from the U.S. side here, you've got, the Trump administration exerting a lot of pressure over Ukraine in particular to make concessions rather than Russia. But on the European side of this, I mean, obviously, while Russia would like an end to the sanctions that have been placed on it since the outbreak of the war. The EU members are not particularly willing to, make any sort of concessions on that front here. So you've got a lot of the key strategic players that could ultimately facilitate an end to the war in Ukraine, seemingly disagreeing or at least kind of coming to head over, some of these different issues here. I think a lot of pieces are at play. The Trump administration has indicated that they'd really like to push for, some kind of a lasting, peace deal by April 20th. Not sure that that's something that ultimately looks realistic at this point.
Jill, thank you so much. Jill Deese is there. Right, some other global stories we're tracking at this point. U.S. Secretary of State Marco Rubio says the Trump White House has, so far revoked over 300 visas as it pushes to expel foreign citizens who protested against Israel. Among them are several international students who express support for Palestine. Their lawyers say the actions violate constitutional rights to free speech and also due process.
Maybe more. It might be more than 300 at this point. We do it every day. Every time I find one of these lunatics, I take away their visa.
You're saying it could be more than 300
sure,
visas?
I hope. At some point, I hope we run out because we've gotten rid of all of them. But we're looking every day.
Elon Musk says he plans to slash $1 trillion in government spending by the end of May. Now, the billionaire running President Trump's so-called Department of Government Efficiency told Fox News he is confident the savings won't affect critical government services. The Doge website so far lists about $22 billion in contract savings while claiming $130 billion in unspecified cost reductions.
They may characterize it as shooting from the hip, but it is anything but that. Which is not to say that we don't make mistakes. If we were to approach this with the standard of making no mistakes at all, that would be like saying someone in baseball's got to bat 1,000. That's impossible. So when we do make mistakes, we correct them quickly, and we move on.
US Attorney General Pam Bondi has suggested she won't seek an investigation into the Signal group chat that saw Trump administration officials reveal sensitive military plans to journalists. Bondi says the episode was a mistake, but no classified information was discussed, and the mission was successful, making the world safer. And we do just have some fresh lines coming in from the Pete Hegseth trip to the Philippines, saying Trump is committed to the alliance, the US alliance with the Philippines, also saying that deterrence still necessary, considering the threats from China. Now, Pete Hegseth's trip to the Philippines is part of his first big trip to Asia in that role as US Defense Secretary. Bloomberg's Avril Hong is with us more. What is he looking to try and achieve here?
Good question. I mean, I think it's about underscoring the U.S. commitment we've just heard from Hegseth and really reiterating that for the likes of the Philippines, but also keep in mind the backdrop. This is coming at a really awkward time, right? After these U.S. plans to bomb Houthi rebels in Yemen came to light via a commercial messaging app, Signal, and you just mentioned what Pam Bondi is perhaps not looking to do, but there's also a lot of controversy. And for Washington security allies in this part of the world, the key question is the U.S. credibility. So I guess to answer your question more pointedly, it's about underscoring that at this point. And of course, this is also coming at, a really sensitive time, his first official trip to the region. So we're looking to visit Japan as well. And it's timing-wise a bit tricky because these reciprocal tariffs, particularly auto tariffs as well, going in place on the likes of Japan. So maybe there's that narrative that, he uses it as a way to get these partners to up their defense spending in order to get lower tariffs. But I think this all just complicates the kind of messaging while he's in the region as well.
What would a win look like for U.S. allies after post this trip?
I think if they could kind of underscore that, sort of united front. I mean, this is coming at a tricky time, right? Where China's kind of upped its willingness to show its presence in the Indo-Pacific. We see them, sending sort of these ships to the Australian coast, and this is quite different kind of optical situation compared to when Trump first won election, and we saw Beijing sort of embarking on a charm offensive with the likes of Australia, Japan, even to some extent India. So I think this is all coming at a time where there's a lot of realignment, and if we were to see a win, it would be maybe that sort of united front, I guess, when it comes to some of these security partners of the U.S. in this part of the world.
I mean, to your point about how we're seeing the tariff part of the story and the national security part of the story tie up, it reminds me of the conversation we were having, just earlier this week with Kellyanne Shaw, who was a trade negotiator during Trump's first presidency, really pointing out that there's two types of tariffs here. There are tariffs that are about rebalancing, and then there are tariffs that are about essentially attaining national security goals. And in some sense, that is the other tool that Hegseth is taking to Asia. That is the other thing that is sort of in his pocket. And we will be waiting to see as part of this trip whether or not there is some negotiation around that if U.S. allies can offer what it is that President Trump is seeking here.
Yeah, and I'm curious to see how that plays out in the Japanese context, because I think, as Avery was pointing out, very, very nice context, that you do have the tariffs, and it's almost it's not the perfect analogy, but the small yard high fence analogy on the Chinese, right? So you come to one of your allies with, of course, these tariffs in place, but you also want to guarantee that, beyond the economic, there's also, I think, the mirror opposite of a national security blanket that we will keep on this part of the world beyond, of course, the economic concessions that might be on the table. So we have to work on the details of this and maybe how that perhaps plays into the broader conversations. Avril Hong here in our set, of course, our studios here in Hong Kong. Going into the last 10 minutes, speaking of Japan, the last 10 minutes of the morning trade there, we'll get you an update of these markets, mostly moving to the downside. On that note, happy Friday. Right, welcome back. Let's take a look at New World. We're down about 0.4%. Of course, this interesting story coming out of Bloomberg here on they're raising some money, quite a bit, and they're pledging an interesting piece of collateral here. What do we know? Well, let's bring in Loretta, of course, who is here with us to help us understand this, what the negotiations are, and what specific asset has New World said, if we can't pay this, this is yours.
Yeah, so this is one of New World's most prized assets in Hong Kong. It includes, of course, the famous K11 Museum shopping mall and also the Rosewood Hotel. And this is something that hasn't been used to back bank loans. And New World is really, showing the genuine effort to reassure the banks that they're pledging these assets, and this is for a new $2 billion loan on top of another around $8 billion of loan that New World is already negotiating with the banks.
You're very much in the weeds, I know, with a lot of people who are interested in this potential deal with New World. Can you just give us a flavour of the interest that we're seeing in Hong Kong in participating in some way in the restructuring deal here? And also whether this latest move, I mean, what does it say about where we are in that in that discussion?
Yeah, I mean, take it back a little bit. The new money, the potential money from the loan, New World said, will be potentially used to pay back debt, and it doesn't really specify. So I think the market is taking it very positively because people think that it could be used to pay the bondholders as well. New World has several existing bonds, including a perpetual note that will have a call option later this year. So I think that's important for a lot of creditors that are eyeing, what the company can do to reassure all of its lenders and creditors. But on another point, we're hearing from sources that this potential loan could be eyeing some new lenders to participate. And again, there's still risk there because all the banks in Hong Kong, they have a lot of exposure to New World already. So bringing new lenders will be crucial for the company in order to get these new credit lines because
potentially these existing lenders of New World, wary of real estate exposure in Hong Kong, would not want to, massively expand their balance sheet just for this company. And then on the other hand, another risk is, of course, being a real estate developer in Hong Kong. You're facing, the slump in the property sector here, and a lot of your commercial assets could be revalued. We're hearing from BI that the potential valuation of the dockside is around 88 billion Hong Kong dollars. Right. But, that number could be put into question with everything in Hong Kong in the commercial property sector dropping in prices.
Okay, yeah, well, thank you so much. Loretta Chen there, of course, our China credit reporter on the latest there. And this is by no means an endorsement, but for those in Hong Kong, just, of course, in town looking for something to do. That's a really nice mall, actually. In my opinion, the best-smelling mall in the world. It's fantastic.
The best-selling mall in the world?
Yes. Yeah, I know that's strange, but...
That's a claim and a half.
Well, go and see and smell for yourself,
Okay.
I was about to say. Okay, some other corporate stories that we're tracking right... Okay, I'm trying to get my head back. Okay, what are we talking about? Oil and gas. Why not, since we're talking about smell here? Offshore oil and gas, energy to be more specific, has posted higher annual earnings and boosting its dividend. We're talking about CNOOC here. Net income rose to $19 billion as output expanded to 727 million barrels of oil equivalent. Now, the company says it will stick to its 3-year output targets through 2027.
Yeah, elsewhere, Jiangxi Copper has reported full-year earnings that narrowly missed estimates. The Chinese metal giant says results were boosted by strong copper prices last year, but were affected by its loss-making refining business. It expects copper prices to remain strong due to tight supply, but also warns of market volatility next year driven by US trade policies. And speaking of those trade policies, just a quick look at some of the auto names here, thinking about, of course, how auto tariffs are hitting those names in the region. If we can flip there, yeah, okay.
There we go.
You can see quite a sharp move to the downside. Toyota down, well, nearly 5% going into this afternoon session. Good morning, you're watching The China Show. It's 11:29 a.m. in Tokyo. Japanese markets about to go for their lunch break. And yet we are still seeing that negative momentum. The topics and Nikkei down about 2% as we head into the afternoon, Dave.
Yeah, we were showing this earlier a couple of minutes back. It's really the autos. And, if there is one, I think, tangible market iteration in the equity market of tariffs, it's really autos, right? This week is 3-4% just today on the likes of the big Japanese car makers. It's a different story, of course, when you talk about Chinese car makers. But yes, that is the story there. Tokyo inflation did come in higher than forecasts and just about the same as the previous month. Right, the rest of the region is looking like this. So we talked about autos. So that should show up in the form of your industrials. If I can just look at this, okay. We're looking at every single sector is down. Industrials is down. If you don't see that, that's top row, rightmost tile, 1.6%. Suffice to say, everything is down today. We're in the thick of earnings season as it pertains to Chinese equity markets. In fact, when you look at some of the financials, for example, you had everything from insurers, you had the banks, and some of the brokers coming out as well. You had the sector's defensive characteristics, of course, and, as an investment play, the income and dividend angle to that story. Amidst the jitters across these markets, amidst what's happening geopolitically, and a couple of other banks that are set to report, you have, of course, the biggest one, ICBC. You have Construction Bank. Haitong, of course, is a broker, and, of course, that is Construction Bank. And some of the other financials that have reported so far, the joint stock banks, and we mentioned, of course, some of the insurers there. So, yeah, I guess let's get a sense of the takeaways from this quarter's report card.
Yeah, very busy week if it's your job to look at bank financials. Yeah. Let's bring in Katherine Lei, co-head of Asian Financial Research at JPMorgan. Thank you so much for taking time. As I said, a very busy period. What have been, we were just sort of chatting in the break here, but what have been the sort of positive surprises that you've seen so far coming out of earnings?
I think the biggest surprise on the positive side will be on the net interest margin of the banks because with the backbook repricing for the mortgage in 4Q, we were expecting more severe sequential contractions of the net interest margin. But then that didn't happen. So far, I think no matter it's from the banking regulators' data or the bank's own reported results, I think margin by and large is still stable, except for a couple outliers. But by and large, particularly for the SOE banks, were pretty stable. Yeah.
What is, I think, before we move on to the other parts of the business of the banks here, anything on guidance on margins, on NIM guidance?
I think the margin guidance so far is that this year in 2025 will continue to contract, but the magnitude of contractions will be smaller than 24. I think that's what we've been hearing from management.
Okay, what about the other part, fees, fee business?
Fees. That is actually a disappointment because, with the robust equities markets in 4Q, right, with the policy pivots, we were expecting fee income to rebound. Also, one factor is that one of the key drivers for fee contractions in the first 9 months of last year was because of the cuts in banker assurance fee rates. But that happens in the third quarter, like September 2023, if I remember correctly. That means into fourth quarter 24, that impact is already in the base. So we were expecting decent fee growth, and that didn't happen for some of the banks which reported results. Yeah, I think across the board, we see weak fee income. When some banks reported what we say decent fee income, it is still in single-digit percentage point in a YOY basis.
Okay. I mean, just to your point there about, of course, the stimulus pivot, how are you expecting improved consumer demand from SMEs, perhaps finally an improvement in some of that credit data that we're waiting? I mean, how are you factoring that into your outlook?
Okay, I think marginally it should be positive, right? And actually the banks are guiding that marginally that should be positive, but we haven't seen that positiveness being reflected in banks' data yet. Even when banks are commenting on their January, February trends, they haven't reported their first quarter results, of course. But even in January, February, they said that loan demand for the retail sector across board is weak, except for mortgage. So for mortgage, they do see some rebound in demand, but that's on a sequential basis. So if you compare to a YOY basis, I think, depending on banks, but for the industry as a whole, that is, I wouldn't say that's a robust growth on a YOY basis, but sequentially, yes, that's improving. On the other ones, like, say, credit cards, consumption loans, I think the demand is still weak. SME financing, I don't see any recovery in this sector yet. In fact, if you look at some of the banks which provided breakdown in 4Q, we see acceleration in NPL formations in the SME sector. So in the microfinance sectors in the bank's book. So I think even if there are marginal improvement, I expect that earliest will be a second half story instead of a first half story.
You mentioned this pickup. I was going to ask you something else, but you mentioned this pickup in SME exposure and the pickup in non-performing loans. How big of a portion is that as a piece of the... In other words, do I have to be worried?
Yeah. It's about low teens percentage points of the loan book. So it's not huge. And I think different banks have different way of managing that risk. So say, for example, one of the banks mentioned that more than 80% of their microfinancing loans are collateralized. So I think what the bank is hinting is that, yes, there are defaults or rise in NPL formation, but the loss given defaults could be manageable because they're collateralized. Yeah.
Just picking up on that theme of risk that you mentioned there, what about exposure to some of the sort of overcapacity sectors?
I think when we say overcapacity sectors, there are two ways of categorizing them, right? One is the kind of like steel, cement, the old overcapacity sectors. I think those are okay because the banks have been dealing or trying to manage that part of the book in the past decade, so since like 2015, 16. So I think they are pretty much, I wouldn't say done, but I think the risk is not particularly high at the moment for those. But I think what people or investors are generally worried about is the potential new overcapacity sectors. Say, for example, maybe some of the EV, the green initiatives, because this year, I think there are a lot of policy push for banks to finance in those sectors. On that one, of course, when we talk to banks and they say, oh, it's still manageable because we only lend to the high-quality borrowers. But I think time can tell. Like at this point, it's too early to say whether that risk is fully managed or we are still going to see rise in NPL formation on that book. Yeah.
What about on dividends? Because that's really been the key attractive element for investors right now. Any issues on commitment? And what are the best dividend plays here? Because they seem to be all giving out quite decent amount.
Yeah. So I think when people say the dividend play, they usually mean the SOE banks, mainly because for the SOE banks, not only that they have strong commitments on not lowering the dividend payout ratio, which is 30%-ish, but also that their earning stability is a lot higher than the joint stock banks. So earlier we talked about the joint stock banks' results, right? It's all over the place. Some are like delivering double-digit growth, some are delivering double-digit contractions in the 4Q on a YOY basis. But if you look at the SOE banks, I think very stable. It's like low to mid-single-digit percentage points of earning growth. I mean, 4Q, and one of the banks is beating that kind of range, but very stable growth for the SOE banks. And I think they have a strong commitment to maintain the dividend payout ratio. Particularly, we know that the SOE banks have a capital injection plan. So after the capital injections, I think that concern that they may need to lower dividend, that concern has eased.
Okay. Fantastic. Thank you so much. It's great to spend time with you to talk us through this. Of course, lots more coming up, of course, with the big banks, as Katherine is pointing out, the state banks, of course, reporting later today. Katherine Lai, co-head of Asian Financial Research at JPMorgan. Right, for some Friday fun, if a banking conversation isn't enough, Bloomberg.com has a game for you. Pointed, the news quiz for risk takers. You'll need to use strategy to navigate our questions about the week in markets, everything from politics, luxury, culture, and more. The more you know, the higher you score. Subscribers can play on the internet, Bloomberg.com/pointed. Right, welcome back. So really 2025 has been a story of gold and everything else, right? So as you can see over the past year, we're up, 40%. And just when you thought things were looking slightly overheated, 2025 happened and we've gone up every single week with the exception of one here on gold. Goldman Sachs came out, they revised higher their own forecast for gold to 33 a pop. Let's bring in Suki Cooper. She's with Standard Chartered, of course, precious metals analyst. Suki, well, first, thank you for joining us so late in your day. I'm sure things are busy, though, either way. So, I mean, what's going on here?
We have a number of factors that have really held gold prices higher. On the downside, prices have been quite well supported, given that we've continued to see good central bank demand. But the real shift has materialized as ETF buying has picked up. We know that ETF demand was quite lackluster over the last couple of years, and ETF demand tends to follow some of those real yield and macro drivers, such as inflation concerns about stagflation. So the ongoing uncertainty created by tariffs, given what that might mean for supply chain challenges, whether that increases the risk of recession, has really buoyed some of that macro longer-term appetite in gold and has helped propel prices to all-time highs. So it's a combination of some of these factors that have built over the last couple of years, i.e. central bank demand, but it's been compounded by new longer-term investor interest coming into the space as well.
Suki, how are you factoring in your price targets in the context of this incredible momentum that we've seen for gold?
There's a number of factors that we have to take into account. On the one hand, yes, we're seeing a lot of positive momentum coming in from ETF demand, which has been largely absent until the first part of this year. On the other hand, record prices are also hampering some parts of the physical market and some parts of the retail market as well. Coin demand, until very recently, had been quite weak. But we're seeing both India's market and China's market trading at a discount, and it's really weighed on jewelry demand. So it's not the same scenario that we had, say, 4 or 5 months ago, when pretty much every single factor was firing on all cylinders. Now we are starting to see some cracks, so it does suggest that prices might need to consolidate in the nearer term before we see that next leg higher. We do think that a lot of the factors that have driven gold prices are likely to remain intact in the coming weeks, but we are cautious about the physical market being under pressure.
Right, and just in terms of, just to build on that, Suki, to understand what the possible range is on gold prices. So, well, what I'm trying to ask is, what is a buying opportunity here? Give us your expectations on the price range as we consolidate. And that next leg, do you have a new target here on gold, if you do have one?
Quite difficult in this current environment to say where that next leg higher might go, but on the downside, we can have a bit more of a guidance when we're looking at technical factors or where we're looking at where the physical market might come back in. Here it looks like levels closer towards 2,900 might be sufficient to try and reinvigorate some of that physical appetite, especially in key regions like India, where we're coming up to the second largest gold buying festival at the end of next month. So we could see some good support coming in there. But in terms of the top range, at the moment, ETF demand still has quite a large gap to fill. So if we're looking at where the peak was back in 2020, there's still almost 450 tons of demand that could materialize and really drive the next leg higher. So we could see prices surpassing 3,100 in the nearer term, but those higher levels at the moment are quite difficult to pinpoint and say that that's where a cap could be. So we've said it's better to look at the downside and see where that support should come into play.
Well, the central bank angle, I wonder if you could tell us a little bit more about what you're seeing recently as far as demand from central banks.
What's been really interesting here is that at the end of last year, we started to see some of the buying picking up again. So a lot of the reported demand that we were seeing across various number of countries accelerated after the US election results. And what's happened so far this year is that the volume has continued. We're still seeing central bank demand materializing, but the absolute levels have slowed down a little bit. So if you look at the data that's reported so far, we can see that China continued to add to its gold reserves, but at a more steady, slower pace of 5 tons per month. We've seen other central banks like Turkey and continue to add to the reserves, but we've seen net selling so far in March. So the appetite is still very much there, and it's still being dispersed around the globe. It's not one particular country, it's not one particular region. The demand is still very much widespread, but we're also seeing strong appetite when it comes to some of the unreported buying as well. So the overall appetite from the sector, I would say, isn't exhibiting necessarily strong price elasticity at the moment, but it is showing that there's continued appetite there. And more importantly, even at record levels, there's limited appetite to sell gold.
Suki, thank you so much. Burning the midnight oil there for us. Suki Cooper, precious metals analyst at Standard Chartered Bank. Just before we leave you for a quick break, we're looking at live pictures from Hong Kong's Kai Tak Stadium, where the Hong Kong Sevens has kicked off. Of course, the first time we are seeing the Sevens come to that stadium. We'll have coverage from that event next. Stay with us. This is Bloomberg. Good morning and happy Friday. Now, Hong Kong's Rugby Sevens is kicking off today on a brand new stage, the Kai Tak Stadium. It's a 50,000-seat venue, the showpiece of the city's $4 billion sports park. It's one of the many ways that the financial hub has been trying to boost international tourism, revive its economy. Our China correspondent, Min Min Lo, joins us now live from the stadium. Min Min, just give us a flavour of what we're seeing. I believe we have the first match playing out now, the women's Rugby Sevens teams, Japan versus Canada.
Yes, Canada just won their first match here that just began about 20 minutes ago. The stadium is actually pretty empty, which is quite normal for a Friday. Ain't nobody got time on a Friday to watch a rugby match in Hong Kong. But this weekend, though, you'll have the finance professionals filling in those VIP spots here. And it's not just an event for a sports fan. You have families coming to just soak in that carnival atmosphere. And you have the finance professionals, of course, because this event was strategically planned event to cap off that week of back-to-back investment conferences. And it's bid by the government to bring back the tourists to Hong Kong after those dwindling numbers post-pandemic, the exodus of expats after the pandemic, and the imposition of the national security law as well. And this $4 billion sports park, taxpayers will be wondering, is it worth all that money? Because, of course, it's a bid to reclaim Hong Kong's status as this hub for international mega events as well, after Hong Kong lost out to Singapore in attracting those mega superstars, the likes of Taylor Swift and Lady Gaga. The next big event that will be held here is the Coldplay concert, and so that turf is going to be rolled out, put into refrigerated trucks, shipped across the border to a dedicated farm in Zhuhai to be rehabilitated while they turn this venue into a completely different setting.
Yeah, and Min, I think the multi-purpose, let's call it, ability for the stadium to transform itself, given the, I guess, the usage, might that flexibility be able to then, appreciate the projected economic returns? Because quite a bit of money was spent to build such a high-tech stadium.
Definitely, and some fans are saying that this venue is actually less convenient than the previous one, the Hong Kong Stadium where the Rugby Sevens used to be held, because that stadium was just a stone's throw away from the downtown bar strip, and that was a very memorable part of that whole experience, right? It's walking out of the stadium with tens of thousands of people singing in good spirits, walking to the bars nearby, and some people say because this is a new neighborhood with perhaps less mature sort of amenities around, maybe that atmosphere will be a little bit diluted, but still, the Hong Kong Bars Association is expecting that bars in this side, the Kowloon City side, will still get a 40 to 50% bump in business. Less so at the Hong Kong Island side, maybe 20 to 30% over there. But this is a big splashy event because it's not just the first time they're hosting the Rugby Sevens here, it's also the 100th year anniversary of the old Kai Tak Airport. And so Cathay Pacific, a co-sponsor of this event, is going to send an aircraft to fly through this area, through the Victoria Harbour on Sunday at 4 p.m.
Min Min, thank you so much for joining us there. Bloomberg's Min Min Low at Hong Kong's Kai Tak Stadium. Someone who does have time on a Friday to be watching the rugby, as she well deserves. And talking about some of those efforts by Hong Kong to boost its economic status, thinking about tourism and retail, Hong Kong's Financial Secretary Paul Chan has said that the city's economy is steadily marching forward. He also told Bloomberg's Family Office Summit the financial hub is seeking to expand the Shenzhen-Hong Kong Stock Connect beyond the Greater Bay Area. Take a listen.
Our ambition is to extend this kind of connect arrangements beyond Greater Bay Area. Say, for example, in China, Shanghai also very prosperous, high income. People also want to have certain asset allocation offshore. So why not? At the moment, in this stock market, the connect scheme is between Hong Kong, Shenzhen, and Hong Kong, Shanghai. Yeah.
I mean, we're here to talk about family offices and obviously the priorities of the government in terms of the progress report, where we are, and what you guys want to achieve. Well, give us the state of affairs. How are things? Give us an update of what you've seen so far, and are you happy with what you've seen so far?
Well, the economy is growing steadily. Property market stabilizing, stock market doing very well. Unemployment rate is low. Inflation rate also very low. So overall speaking, I think we are marching forward steadily. And at the same time, the mainland economy is also stable, growing steadily, which is also a positive factor for us. We expect the stock market will continue to be very vibrant. In terms of IPOs, there are over 100 major companies on the pipeline waiting to be listed. We are also working very hard to promote cross-boundary capital flow. In addition to the connect arrangements with the mainland, the possibility of enhancing two-way capital flows between Hong Kong and the emerging markets like the Middle East.
I forget where I read this over the weekend, that Hong Kong doesn't rank very high in terms of happiness. And I'm wondering, and I'm cognizant I'm asking this for a room full of financial professionals and the financial secretary. I mean, do we work too hard in Hong Kong? Like, You know, how do we sell the lifestyle if it seems as if we're just chasing our tails?
Yeah, we do work very hard. And also, we went through some challenging years, as you may know. Particularly this week, wonderful week. We have an array of arts, sports, culture, F&B. So work hard and play hard.
Yeah, that was our conversation yesterday with Paul Chen, Hong Kong Financial Secretary. And yeah, he is inviting everyone, of course, to check out everything from the financial conferences, which we're almost wrapping up, to, of course, everything arts, cultural, and as we were just pointing out, sports going into this weekend. Yep, and just a look at the markets before we wrap things up. So Dave and Bex are about to say bye to you guys. We will see you all next week. Work hard, play hard. Well, somewhere in between. We're going to hide in a cave these next few days. We'll see you all on Monday. This is Bloomberg. Happy Friday.